Bring on board our fundamental voice then, Mayuresh Joshi, the fund manager at Angel Broking, joins us now. And hi Mayuresh, thanks much for joining us. We're seeing massive volatility in the markets for the last, a month or two. But talk to us about some key triggers that could actually help the market see a leg up from here. In fact, Angel Broking at large is looking forward to some kind of earnings recovery come in. What are the sectors that you're betting on as part of, names which could see some good earnings growth this quarter?
Good afternoon. A large element in terms of how Q3 numbers have panned out is giving us confidence that Q4 numbers should be relatively better. And going ahead as well, with the kind of expectations that the general market has, our own sense is a 13-14% compounded growth over the next year and a half. Having said that, I think where will these legs for growth come from? It's obviously going to be a lot driven by the consumption sector. And with the government expected to front load a huge amount of capex, the borrowing calendar is something that we'll come to know on what the government is intending to look at in the first half. And figures are pegging it close to around 3.8 or between 3.8 and 4 lakh odd crores. So in that respect, again, consumption is going to be an extremely critical theme. Consumption can be a wide basket. So within consumption, again, the government-led programs, say on affordable housing, I think we do remain sanguine on few housing finance players, where our own sense is that where leverage is not too high and where the capital adequacy remains extremely strong, I think that is where the growth and the earnings momentum for these companies will come. At the same time, because asset quality pressures for such companies probably might not be on the higher side, the excess provisioning and higher credit costs will not eat into the return ratios, specifically ROAs and ROEs. And the third angle obviously becomes their borrowing mix. So a varied borrowing mix obviously aids the overall NIMs because the...
Okay, let's get back to our fundamental guest as well. Mayuresh is waiting by. Mayuresh, thanks a lot for waiting by. What is your view on the entire auto space? How is it looking to you at this point of time, given the kind of, rapid developments happening, transition to BS6 from BS4? There's, of course, the EV play, which is, which a lot of giants are riding high on. So overall, looking at it from a slightly medium to long-term point of view, how does the auto space look to you?
It looks very interesting, and as Ashwin was rightly mentioning, I think if the dates do get preponed, I think there are a whole lot of adjustments that the automakers need to do, that the auto ancillary providers need to do, and that creates a huge amount of misproportion in terms of how the entire activity, in terms of the supply chain dynamics, will pan out. But having said that, I think the longer term view obviously remains very, very positive. And to drive home the point that I was referring or alluding to earlier in terms of consumption as a theme, I think four-wheelers look pretty interesting as a space. Within four-wheelers, I think Maruti is something that we've continued to like over a period of time. And looking at how their volume growth numbers are expected to pan out, and significant absorption of their fixed cost element in the Gujarat plant should drive leverage for the company. Even within the two-wheeler space, companies like Hero MotoCorp, the valuations might be on the fairer side. I think they've given a very optimistic outlook in terms of their volume growth, a double-digit volume growth, margin sustained at the current level. And even if input cost inflation does move higher or has moved higher, I think the pass-through in terms of prices should work out. The EV play is again very, very interesting, but again it's going to be a very time-consuming process. A lot of capital investments over the next few years will be laid out by a lot of companies, both on the manufacturing side as well as the ancillary side. But within this space, again, I think Endurance Technologies is something that we will continue to prefer more in terms of the strong two-wheeler order book. And again, as an EV player, I think this company is technologically adept, probably to adopt it faster, and probably the kind of cash flow dynamics that the company has with a strong balance sheet should augur well for their bottom line growth as well. So we remain selective, but as a space, I think very, very optimistic over the longer term.
Names like Maruti and Hero, that's Mayuresh view. Mayuresh, my question would be straight on the sector which you like, and let's not discuss auto because you already spoke on it, and banking and financial, I think we discuss every now and then. Apart from these two sectors, one sector which you feel that would be a market outperformer, and within that space, one large cap stock and one mid-cap stock.
So consumption, Siddharth, as a theme is something that I'll continue to like. So again, consumption as a basket is large. So again, consumer durables, FMCG, cement plays, as I was mentioning earlier, but a lot of government focus coming through. Road project wins in terms of infrastructure. So I think cement is something that we will continue to like. But within the larger basket of consumption, Century Plywood is something that I'll still continue to prefer on declines. The expansion in terms of the laminate capacity that the company has done is going to augur well. The new MDF capacity that has come on board is definitely going to add in terms of the revenue streams for the firm. And what it effectively does is it pumps up the overall top line and bottom line growth for the company. A large part of the market is unorganized, so to that bit again, as compliance has become far more stringent and with the rollout of the e-way bill as one really expects from 1st April, I think this can be a significant value driver for the company. The other stock that I'll probably like within the larger basket and within the infrastructure space again, I think would be Sadbhav Engineering. Again, a very strong company in terms of order book and what you've probably seen in terms of delivery, both in terms of execution as well as all the constraints that the company faced earlier in terms of working capital. With a lot of HAM projects coming on board, IRRs are going to improve, with execution capacities improving. Again, I think the synergies in terms of return ratios improving are going to be very, very significant. The revenue visibility with the book-to-bill ratio remaining strong is an added caveat in terms of what the stock can perform, with the assumption execution capabilities quadrupling from the current level. So yes, I think Sadbhav Engineering and Century Plywood, I think these two stocks respectively within the infra and the larger consumption basket is something that I'll continue to prefer on declines.
Thanks, Mayuresh, for giving host of ideas related to auto and infrastructure space and also your view on market. Thank you for joining us. Moving on.